Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Vivek Iyer. Good morning, Vivek.
Good morning.
Well, a fresh new week, but it has started on the back foot. It's a big cut that we're seeing across indices. In fact, if we talk about the Nifty, now it has fallen below the 23,900 mark. We're just testing the 24,067 mark. It would bounce back from there. But now at the day's low, and the cut continues. It's a 1.8% cut on the Nifty. Mid caps are seeing a bigger cut. It's a 900-point cut. Of course, in absolute terms, it looks bigger. It is largely in line with what the benchmarks are doing. The Bank Nifty too is seeing a cut, but it is outperforming the benchmark. So that's the kind of market we are in, where an 0.8% cut on the Bank Nifty, we are calling that an outperformance versus the benchmarks. Well, you know, with this, Nifty is now down around 8.5% from the highs that we have seen. And this number keeps on changing, of course, because of the cuts that we continue to see as well. Number of reasons. We did see stretched valuation, something that everyone's been talking about. Second has been, interestingly, the earnings growth or the earnings cuts that we have seen this time around. Motilal Oswal says that earnings growth for 166 companies under coverage, it declined 8% versus an estimate of 4% decline. This is the lowest level they've seen in 17 quarters. And Jeffrey says now, analysts have cut FY25 earnings estimates for over 60% of the 98 companies that they cover. That's a big cut that we are talking about. This is the highest downgrade ratio that they've seen since early 2020. And that is when the real rally had started, right? Post that early 2020 mark. They also say that they expect Nifty earnings growth to be around 10%, which is 2 to 2.5% lower than what they had indicated earlier. So definitely earnings cut and the macro spending is something that is scaring the markets generally.
Good morning, Sonal. Very, very rightly put, especially given the fact that we actually went into the earnings season, like you mentioned, with an expectation of a decline, and it's been worse than that. Now, when you're talking about the mid-cap index, you know, that's the one that's seeing quite a bigger cut. So it's been down for 2 of the last 6 trading sessions today, down almost 1.7%. Small cap index has snapped a 5-day gaining streak. So we're starting off somewhat 2082, you know, on a slightly subdued note. Top drags today, PVR, you know, despite the slew of releases that we saw, look at PVR today, down almost 9% as we speak, below the 1450 mark. And in the broader end of the markets, especially when you're talking about the entire auto pack, the two-wheeler space, all of them today have seen significant selling pressure. Hero's down, Bajaj is down, all of them are down almost 4.5%, 5%. TVS Motors, iShares, all of them are down. On the other hand, one outlier today is Naukri or Info Edge. The jobs peak index are slightly positive, and on the back of that, the stock holding in the green. But we have a corporate line on the show, so let's begin trading on with a corporate discussion. Zen Technologies recently reported their Q2 numbers. The company saw its revenue and other income surge. However, EBITDA margin came under some pressure. We are now joined by Ashok Atluri, who is the chairman and managing director of Zen Technologies, to discuss the Q2. Good morning, Mr. Ashok. Thank you so much for joining us. First up, after a slightly tepid Q1, you've seen a much better Q2. Are you now on track to go ahead and meet the FY25 guidance of at least 900 crore top line growth or top line?
Yes, absolutely. Yeah, we are very sure that we will be able to, you know, meet the 900 crore target. And we also feel that the first quarter was reasonably good, and so was the second quarter.
Okay. So you'll be able to meet your 900 crore rupee guidance on the top line, and EBITDA margins is what you'd guided at 35%. Is that achievable,
yes,
or you will cross that? Because on the first half mark, you are already above that at 36.8%.
No, I think we'll stick to the conservative projection of 35% and hope that, you know, we touch that, yeah.
Okay. Mr. Atluri, now that we have spoken about P&L, I just wanted to touch upon the balance sheet as well, because your operational cash flows declined on a YY basis in the first half. The receivables had gone higher. How much higher have they gone? Can you give us an indication of what the receivable picture is looking like? Is this something that would go higher in the second half as well, or come back to normalized levels?
No, we are getting, the realizations are very good at this point in time. And, you know, even though the balance sheet is showing the receivables have gone up, the fact is that, you know, as we getting into the second half, the realizations are coming in. Government is not holding back unless there is a valid reason. So we think that by you know, in the next couple of months, most of the receivables will be down. We would have received.
So what is the average receivable days for you, Mr. Atluri, and will that be the number we'll see by the end of FY25?
So we have been, you know, around 150 days, almost 5 months. We expect that this will continue into the future also, plus or minus 5 or 10 days, but not more than that.
Mr. Atluri, when you're talking about the domestic order book, the domestic part of the business, you're sounding very confident. Now, talk to us about exports. What was the export contribution in this particular quarter? FY25, earlier you had given a guidance of close to 300 crore. Are you on track to achieve that?
Yeah, we are on track to achieve that. I think that because that's the order execution that we currently have. And, again, the percentage of export that we have done is around 13% this first half year. And we expect that to go up in the second half. It will be, I think it should be around, probably around 30% or so of the whole order book position that we execute out of 900 crores, yeah.
Okay, so order book, what is the guidance that you're sticking with? As far as Q2 was concerned, it appears to be slightly muted. Was this because there was some slowdown as far as spends or awarding new contracts was concerned? And also give us a sense of, what are the new orders or the contracts that you're executing versus what are the annual maintenance contracts you would be executing?
So again, we are doing about 8 to 9 crores quarterly for AMCs, and we think the order, we have all, from the beginning, we have been saying it will be towards the end of third quarter and the fourth quarter that we'll be getting the, substantial, the order book replenishment that will be happening. And we still are confident that, the order book replenishment will happen then. Yeah, and again, if you remove the, 35 to 40 crores out of the 900 crores, then we'll be having about 850 plus crores of equipment order out of the 900 crores.
Okay. Mr. Atluri, the other thing that the street is watching out for in terms of some execution, because you've already spoken about how you're looking at inorganic opportunity. The last time we'd spoken, you said you do have 100 to 250 crore rupees of 2 to 3 acquisitions which you're looking at. Anything that will be finalized in this calendar year or this financial year? And if yes, will that start, adding to your growth from FY25 or FY26?
So we think that, in this financial year, definitely we probably will be able to show some acquisition happening. We are reasonably confident at this point in time. And if we do acquire, I think there'll be some incremental, addition during FY26 for sure. But FY27 will be the big year for the acquisition, because at that time the integration would be over and we would have introduced them to our complete value chain, including our our customers, existing customers. So FY27 will be big for any acquisition that happened during the year.
So what is it that you've kept in your kitty as far as the acquisitions are concerned? And initially, where will the acquisition targets lie? Will they be in the simulator space, or what kind of space will they be in? And FY25, what will be the likely size of the acquisition you're expecting to close?
So, our target size is between 100 to 300 crores. So, we are evaluating, we are not sure which one will get concluded. And we think that the acquisition will happen in 2 spaces. Again, electronic warfare, which is basically anti-drone system and adjacent spaces. And the second one is simulators. So these are the 2 areas that we are looking at. Again, because we have strengths, but if there are any gaps, like, getting into Air Force simulation or something like that, that's another thing that we are looking at. So if these, again, not very diversified acquisition, it is, even though it is inorganic, but it is building the strength of the value chain that we currently have. And I think the acquisition will definitely add a lot of value to Zen's current portfolio.
Okay. All right, Mr. Atluri, thank you so much for joining in today. Pleasure speaking with you. And that's the word coming in from Zen Technologies, maintaining their guidance for FY25. Receivables will also come down to 150 days. We'll do one thing. We'll slip into a short break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.
Welcome back to Trading Hour. Well, let's now shift the focus to the commodity space. Manisha joins in, and today we are focusing on base metals.
Oh, well, yes, we are. Thank you for that, Vivek. And base metals as well seem to be doing well. Actually, the commodity markets today have started the Asian markets on a stronger note. One, you have the dollar index, which has seen a decline. It's trading below 104 right now. And the second thing is that the markets are now looking forward to the US Fed meeting. 25 basis point of a rate cut is something that the street, while has already factored in, but it really is going to be about the guidance going forward that the street is looking at. Well, we have seen prices gain up by a percentage point in the Asian markets right now. And with that, the copper prices are up by 13% in this year until now. The street is also looking at the Chinese meeting that starts on 4th and continues until 8th, and an expectation that 10 trillion yuan of fresh stimulus measures could perhaps be announced this time around. It would be between debt, property and construction, and that in turn also has been supportive for metals. The street is also looking at Codelco's data, which says Codelco, by the way, is the world's largest copper producer. The third quarter numbers in sense of production are slightly lower than expectation, and that has been supportive as well. Base metal prices in this year have done quite well, including copper, aluminum and zinc, with an expectation that if China would come out with more stimulus, you could be looking at further gains continuing.
Okay, gains could continue, unlike what we are seeing in the equity markets. Thank you so much, Manisha, for joining us as always and telling us what's happening in the commodity space. Let's move on. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this. Welcome back. Well, the selling pressure has intensified. If we look at the Nifty, it's down almost 500 points right now, testing that 23,800 mark as well at the day's low. And you know what's leading to this fall? It's the Bank Nifty. When we started the show, it was down around 0.8%. Now it's a cut of 1.1% on the Bank Nifty. We have the likes of IndusInd Bank, which is at the day's low. HDFC Bank, a big weight on the Nifty Bank and the Nifty as well. That's leading to the fall that we are seeing right now. Sharp fall is what we are seeing on the front line. As there you go, HDFC Bank leading to the fall that we are seeing in the last couple of minutes. Reliance Industries should also come up for you on the screen because that's the one from which is another heavyweight which is leading to the fall there. And Axis Bank, again from the banking pack. So this, it's the Bank Nifty which has seen more pressure from the top in last couple of trading minutes, and that's leading to the fall. And mid-cap index is now down almost 1,000 points. It's a 1.7% cut on the mid-caps as well. So all across, we are seeing big cuts come by in the markets right now. So let's get a technical check on the market. Soni Patnaik from JM Financial Services is joining us now. Soni, we have started the week on the back foot, and the back foot, like it's a big cut we are seeing across the board. What's the next trade? Do you think there could be more selling pressure? Every sector is in the red today.
Hi, good morning, Sonal. Thank you for having me on your show. Certainly, I think today there has been a lot of selling pressure. Nifty broke a very crucial support of 24,000. The next support that can be seen is towards 24,700. The only ray of relief over here is that it has actually just entered an oversold zone. So there's a possibility that another 100 points of pain and there could be a small recovery. However, as long as it's not able to cross and sustain above 24,200, it continues to see the selling pressure, and every rise may just convert itself into the selling pressure. Talking about Bank Nifty, 51,000 still continues to act as a support. If Bank Nifty breaks 51,000, there's a high possibility that it can even test 50,500, and any sustenance below the 5,500 level will bring in more caution for Bank Nifty, and the fall could be even more severe as compared, in comparison to what we can see right now. So I think both the indices are very critical at this moment, and a sell on rise structure continues to be the strategy, or at least when it comes to indices, it's wise to remain hedged for the moment.
Good morning, Soni. Soni, any buy or sell recommendations for clients today morning?
Certainly. So the first, sell would be in Astral, which has seen breaking its support of 1950 level. Now, there's a good breakdown that we can see in Astral coming. There's enough call writing happening at higher strike prices. So one can sell Astral futures around 1940 and on very small rise up to 1950. That range can be a good sell. Keep a stop loss of 1980 and a target of 1680 to 1650 can be seen. So this is a sell recommendation. The other recommendation would be a conditional buy. The conditional buy is in Federal Bank, which has been sustaining above a 200 level. The condition over here is to buy Federal Bank only on a move above 207. So if it crosses 207, one can buy at those levels, keeping a stop loss of 202 only then, and look for targets of 216 to 218. So that's a conditional buy and a Astral sell from current levels.
All right. Thank you, Soni, for joining in today. So big pressure coming in, but those are some important levels to watch out for on the Nifty and the broader markets as well. Let's get stock specific now. Get in Sudarshan, who's joining in with the latest updates from the October auto sales numbers. Sudarshan, how did it look?
Well, the auto sales were largely better than estimates, but in line with market move, majority of the auto companies are trading with cuts despite their numbers were much better than estimates. So starting with M&M, both auto and tractor segment have done better than estimates. Auto segment was led by SUVs, which saw a growth of more than 20%. Even tractor segment has fared better, and good monsoon has helped tractor sales. Maruti, total sales were in line with estimates. Exports have led the growth, but concern for the companies starting the lower end segment, for which growth was down 20% year-on-year. Tata Motors sales were higher than estimates. We were expecting a decline because of CV sales, that CV sales have been under pressure for the last few months, but companies reported sales that are largely unchanged. Even for JLR, October US retail sales, the growth has come in at 20%. For TVS Motor, here also sales were in line with estimates. Motorcycle sales were up 14%. Scooter sales have jumped 17% year-on-year. Eicher Motors, Royal Enfield sales have come at a company has reported a highest ever monthly sales. Royal Enfield total sales have come at a 1.10 lakh units. For Hero Moto again, it was sales were higher than estimates, and it was led by 100cc and 125cc segments. Even on Dhanteras Day, company says growth was in double digits. So overall, sales were largely better than estimates by majority of the companies. But today, as we are seeing that market is under pressure, and in line with that, even all these stocks are falling.
Thank you so much for that, Sudarshan. Like you mentioned, a lot of the auto stocks today are under significant pressure, especially the two-wheeler names. But earlier today, we spoke with Rakesh Sharma, the Executive Director of Bajaj Auto. Let's listen in to some key excerpts.
It has been a smashing festive, though it started a little bit tentatively before the Shera, but by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view. Our sales have been, overall sales has been double digit. Our area of focus, which is the top half of the industry, which is the 125cc plus segment, has grown upwards of 20%. We have sold over 200,000 Pulsars, which is like way, way above the last high which we had achieved. And even three-wheelers has had a smashing month with about 56,000 units of retail. And I think the previous festive was 45 or 46,000. So a very big difference. The area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. I mean, it's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
Okay, that's the word coming in from Bajaj Auto. Let's stick to the auto space. Royal Enfield is all set to reveal its first electric motorcycle at the 2024 EICMA today. CNBC-TV18 Shivani Bazaz joins us straight from the event in Milan with the latest.
Well, yes, big news expected from here in Milan as Royal Enfield, India's iconic motorcycle brand, gears up to unveil its first ever electric motorcycle today at the prestigious International Motorcycle Exhibition, or the EICMA 2024. With this launch, Royal Enfield is making a bold entry into the electric vehicle market. Now, what is generating even more excitement is the nostalgic nod to the past. The company's teasers have been linking this new electric motorcycle to the historic Flying Flea motorcycle, which played a crucial role in the World War II. Now, the new EV motorcycle will likely serve urban riders, reflecting a shift towards a practical city riding over the adventure touring. It looks like this is expected to be a fresh yet rooted in the classic Royal Enfield aesthetic. While exact details on the range, specs and battery remain under wraps, this is expected to be Royal Enfield's priciest bike, emphasizing a premium feel. Remember that the EV segment in India is dominated by electric scooters when it comes to the two-wheelers. So all eyes on the reveal of this new EV era, which is setting a new stage for the iconic brand of Royal Enfield. In Milan, Italy, this is Shivani Bazaz for CNBC.
Thanks so much for that, Shivani. Let's now take a short break. Up next, we'll discuss the way forward for the market with Deepak Jasani from HDFC Securities. Welcome back to Trading Hour. Well, M&M is in focus after brokerage firms Goldman Sachs and Kotak Institutional Equities viewed the issue positive commentary. Sudarshan joins in with more details.
Most of the brokerages remain positive on M&M after companies reported sales for the month of October, which were better than estimates on both the fronts, auto as well as tractor. So Goldman Sachs is a buy call with a target of Rs 3,600 per share. Even it has added company to Asia Pacific conviction list. It says SUV order backlog and upcoming battery electric vehicle will aid the growth, and farm equipment is entering a phase of improving underlying market dynamics. It expects 20%, 100% EBIT and free cash flow CAGR over FY25-27. Kotak Institutional Equities has upgraded the stock to buy and target is Rs 3,150 per share. It says company will continue to outperform the industry growth, and tractor segment is expected to witness uptick during H2 FY25. Even on the valuation front, it says stock is currently trading at an attractive valuation. So both GS and Kotak Institutional Activities remain positive on M&M.
All right. Thank you so much, Sudarshan. So that's M&M in focus. It's an outlier in a market like this, up 1.2%. The other stock, which is in focus on the back of news update, is Sun Pharma. It's down 3% after a U.S. District Court has issued a preliminary injunction which has delayed the launch of one of its important drugs. Winnie is joining us with all those details. Winnie.
Absolutely. So yes, this delay in launch of the drug that has come in is Leqselvi, I beg your pardon, Leqselvi drug, which is used for the treatment of alopecia. Now, this was an important drug for Sun Pharma because everyone was anticipating that this would be cleared. Now, this injunction which they got will further cause much more of a delay. They'd gotten an approval in July 2024. So this would delay the launch by a couple of years. FY25, we wouldn't see any revenues coming in on this front. And brokerages were anticipating some bit of a revenue. Analysts were anticipating the revenue coming in from FY25 and onwards. So the revenue expectation that Nomura had from this drug for Sun Pharma in FY25 was around $10 million, then in FY26, $80 million, and in FY27, around $150 million. So clearly, that is something that will not be coming in for Sun Pharma in all these years, and that is why an earnings impact of around 0.4% in FY25, 3% approximately in FY26, and in FY27, a 5% impact in terms of the earnings from this drug. So keep an eye on that. They've appealed for this, obviously, in the court again, so we'll watch out for that. Till that doesn't come in, we couldn't expect a launch.
Thank you so much for that, Winnie. Now, stock down almost 4% in the session today. Well, we had a new listing as far as the infrastructure space is concerned. One of India's largest infra players, Afcons, listed today on the exchanges. It was a slightly muted listing compared to how generally we've seen listings in the past couple of months. But let's have a look at the company itself and what exactly it does. Remember, we had the management on our channel at 10:30 a.m. today, and some interesting takeaways there too. So just quickly run through what exactly the management told us. Number one, total IPO size of a little over 5,000 crore, fresh issue of 1,250 crore, of which the company was looking to use a majority of proceeds coming in from the fresh issue to go ahead and repay debt. Capex of close to 150 crore for purchase of construction equipment. And when you're talking about the order book of the company, it's very, very strong. Remember, it started FY25 with an order book of close to 31,000 crore rupees. At the time of going to IPO, it just close to 32,000 crore rupees. Now, what the company said today is that they've actually booked a little over 20,000 crore as order inflows in FY25 so far. And the order book currently is well over 45,000 crore, including all of the positions where the company is the lowest bidder or L1 at. The company, remember, enjoys significantly higher EBITDA margins compared to its peers, especially if you look at names like L&T. L&T just came out with its numbers last week. EBITDA margins of the core P&M business in the range of 7 to 8, 9%. But this is well over 11%. And the company says that they expect to go ahead and maintain EBITDA margins in the range of almost over 11%. On the back of that, the stock started today on a slightly lower note, but it has seen quite a bit of an intraday recovery post a management commentary, quite strong management commentary as far as the order book positioning is concerned.
Okay, all right. That is Afcon's infra, but unlike the other listings that we've seen recently, it's a market texture as well, which is leading to that fall in the stock price. But it's important to discuss markets today, the fundamentals going ahead as well. Deepak Jasani of HDFC Securities is joining us now. Mr. Jasani, good morning. Thank you for joining in. Well, do you think we are in the last leg of the correction that we've been seeing, or there is more to go? How have you looked at the earnings so far this quarter?
Good morning. Now, the downtrend in the market today is a little bit sharper than what most would expect. But I think there are a few reasons for it. One is that over the last few days, chances of Harris in the US elections have gone up. So some people consider it as not very favorable for India. Secondly, the results season is more than halfway through. So going through whatever results have come in, I think we will end up with a 15 to 17 quarter low growth in the earnings, mainly driven by commodities, metals, cement, oil and gas, etc. So in that sense, there is a disappointment in terms of results. There was not very big build-up ahead of the results, but I think the actual results are slightly worse than expected, especially the broader market results. So those things have combined together to sort of create some sort of a nervousness in other markets. And that is why we are seeing this weakness. Now, this could continue till the US elections are out of the way. So maybe a few more days of soft markets going ahead. Once the US election results are out, I think markets will bounce up. To what extent will depend on the outcome, and by that time we will have the US Fed meeting outcome also in place.
Deepak, thanks. You make a good point over there in terms of expecting further earnings cuts. But to take your mind to one specific sector today that's seeing quite a bit of a sell-off, that's the auto pack. Auto pack Q2, you've seen quite a bit of margin moderation coming in, especially when you're comparing it to what the street was building in. And how are you viewing demand at the current point of time? And do you think at this point of time, auto stocks can be looked at?
So we had the auto monthly numbers over the last 1 or 2 days. So basically, the wholesale numbers have been quite good, in line with most expectations. But what is important is to look at the retail auto numbers. That we will know in a couple of days' time as to how much inventory the dealers have been able to offload. And so that will give us an indication. The festive season started a bit subdued, but I think over the last 8 or 10 days, there has been a pickup in auto sales at the retail level. But once we know the actual numbers, we will have a firmer view on the auto sector. For the moment, I think two-wheelers have been outperforming so far because of the lower base. Now their growth will also sort of moderate, and one will have to sort of refocus on the PV side going forward.
One sector which is an outlier today, Deepak, is this pharma API or the chemical space. At least the chemical space has been under a lot of pressure in the last couple of quarters. This time, some of them have reported good numbers. The commentary has been that maybe second half could be better. Do you think this could be the start for a bull run for the chemical space at least, or some of these API plays?
So we are more comfortable with the API space than the chemical space at this point of time. Now, chemicals there has been some sort of a recovery or bottom formation we have seen in the last month or so, but still the uptick in the prices and the offtake is yet to be observed or noticed. So that may take some more time, I think. We will have to watch out as to how the Chinese stimulus measures result in reinvigorating their economy. So in case Chinese economy starts reviving fast, then probably chemical sector can have a look. One can have a look at the chemicals companies also. But till that time, I think between the two, I think we will prefer the API ones.
Okay, Deepak, and what is your view on the FMCG space, consumer staples at this point of time? Names like Dabur, etc., reported a very weak quarter. Do you think this particular inventory correction, the company took is a one-off, or do you think there is some more pain as far as the FMCG names are concerned?
So as far as FMCG companies or their sales are concerned, there are a few things to consider. One is that the urban consumer is becoming much more health conscious in terms of the ingredients which are being used in the products. But the large companies are still not responsive enough to the demands of the urban consumers. And the urban consumers have a lot of choices in terms of availability of regional brands which are available online. So there is the young generation is willing to switch. There is not much of a brand loyalty. So that the larger companies will have to sort of realize that, and we can cater more towards better, healthier products. And so till they do that, I think they will see volume growth being very muted. And we have the urban demand has been a little sluggish in the last quarter, but this is one of the reasons that the regional brands are gaining at the cost of the national brands. Rural recovery, there are initial signs of rural recovery. If we see momentum there, then probably this FMCG stocks can be looked at favorably.
And what about consumer durables, names like Voltas, Havells? Do you like any of them, especially the AC makers?
See, the peak season for ACs is behind us, but at the same time, AC consumption continues through the year as far as the replacement demand is concerned or new real estate properties are concerned. So in that sense, having said that, I think the valuations of the consumer durables currently don't support a large buying interest.
For the sake of ourselves, at least, we shouldn't be using ACs in November and December. It's different for the companies that sell it, of course, Deepak. By the way, some of these stocks are at the day's low as we speak. IOC, Vodafone Idea, Sun Pharma has further seen a cut there. There's BHEL, BPCL, AB Fashion and Retail. All these stocks are lower in trade as we speak. Deepak, coming on the oil marketing companies, there was a phase where the street liked them for a long period of time, and now Q2 earnings have been very weak. There have been LPG under recoveries, there have been marketing losses. Now we are heading into state elections, but of course there have been no cut in fuel prices as yet. How do you look at this entire space? What about valuations?
See, the oil marketing companies are typically deep value stocks normally in a normal scenario. Currently, we have seen a large brokerage house coming out with a negative view on oil marketing companies a couple of days back. And that is why some of the sell-off today may be attributable to that. Otherwise, I think when the crude prices are on the way down or they are subdued, even the refining margins stay low. So till the refining margins go up and the marketing margins remain protected, I think the buying interest in these stocks will remain limited. Of course, these stocks they give good dividend yield. So in that sense, For people who are not looking at growth, they will be safe havens for the time being in case the markets continues their fall. But otherwise, I think they will have to fall to a much attractive level for people to sort of look at them very closely.
Thank you so much, Deepak, for joining us and giving us your view on a whole host of sectoral indices. Markets continue to remain under quite a bit of pressure. But one stock that's doing quite well today is Azad Engineering. The company signed a long-term contract worth 700 crore rupees with Mitsubishi Heavy Industries to supply of highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. Whole-time director at Azad Engineering, Vishnu Malpani, explains more about the recent venture. As we slip into a short break, let's listen in.
And if you remember, I don't know if the street took a note of it or you took a note of it. In 2012 is when we started. 2022, Mitsubishi laid a foundation stone for a dedicated plant for them. So this is an attempt for from them to increase our wallet share with them. So we are a growth supplier with them. Today we hold about 1%. We are slowly going to increase it to 1 to 2 to 5% slowly. And this contract is a testament to them blocking our capacity and then blocking our capacity for the future. So for Mitsubishi today, you should look at it as, Azad is probably the best cost supplier and also in terms of quality. So we are providing those solutions to them, and that is why this contract is more like, tying down our capacity for the next 5 years to be dedicated to them. So I think, so our order book has grown significantly since our IPO. If you remember, around the IPO, we were at about 2,000 odd crores. And, if you net off the Honeywell and the contract with Mitsubishi, we were at about 3,200 crores roughly. So, this would add another 1,200, 1,300 crores in addition to what we have. So we are looking at about an order book of upwards of 4,000 crores as we speak right now.
Welcome back. Let's talk about the big global event as we enter the final stretch of the US presidential elections. Our colleague Parikshit Luthra is joining in with the latest updates. Parikshit.
With hours to go for the final voting in US elections, the race between Kamala Harris and Donald Trump is far too narrow and too close to call. More than 75 million Americans have already cast their ballot in early voting. Both leaders are now campaigning in the battleground states to appeal to the remaining undecided voters. Harris at 49 percentage points is just 1 point ahead of Donald Trump in overall national polls. Neither of the candidates has enough leads to be able to claim 270 electoral votes. There is still a chance that Trump may win this election. In 2016 and 2020, he had outperformed the opinion polls in swing states. Harris is leading in Michigan and Wisconsin, Trump in Nevada, Georgia and Arizona, but these are razor-thin margins. Harris and Trump are tied in Pennsylvania. The Trump campaign and the Republicans are clearly worried about women voters who overwhelmingly support Kamala Harris. Early voting data shows women have outnumbered men in key swing states in voting, and this could be something that may tip the scales in favor of Kamala Harris. Now, the widening gender gap in voting is a big alarm for Republicans. Addressing a campaign rally, Trump left a dark message saying that he shouldn't have left the White House after losing in 2020. The Republican candidate also said that he didn't mind if someone had to shoot through the fake news to get to him. Now, this is something that is making headlines in US media. Kamala Harris, on the other hand, has appealed to voters, saying they must act to decide the fate of their nation. You can also catch our coverage on the US elections later today, 6 p.m. onwards, where we will be joined by a host of analysts.
Well, time now for a short break. We'll get you more on the markets on the other side. Welcome back to Trading Hour. Well, even as we speak, the selling pressure has intensified, especially when you're looking at the NSE Mid-Cap Index and the NSE Small Cap Index. The NSE Mid-Cap Index is now down almost 1.5%. The small cap index is down well over 2% in the session today. Well, a few stocks that have started hitting session lows. First on the list is MCX. Remember, MCX last day saw an intraday fall of close to 7%, a brief recovery. But today, the stock is down almost 4% and quite a big sell-off, especially in the last 10-12 days as far as MCX is concerned. The second stock on the radar that suddenly hit a day's low is actually Apollo Hospitals, down nearly 2%. And the other set of stocks that are seeing some selling pressure coming in, something that did reasonably well in the week gone by, is the pharma pack. Sun Pharma, like we mentioned, news flow has remained quite weak over there in terms of important launch getting delayed or at this point of time actually halted. And along with that, some of the other names like Lupin 2 have seen some selling pressure emerge at, in the last half hour or so. But moving on, remember, we'll shift our focus back to the market. Market veterans Ramesh Damani, Samir Arora and Atul Suri share the big themes to watch out for and where the market is headed in the new Samvat.
I think the two themes that we're betting, not necessarily from Samvat to Samvat, but over the next 3 to 5 years. The first theme is this, what I've said previously, the digital public infrastructure. India has leapfrogged a generation of infrastructure from analog to digital, from highways to PAN card issuance. So I think there are maybe half a dozen companies and they're still trading at fairly modest market caps. Not necessarily price to earnings ratio, but modest caps. And compared to the opportunity that I see ahead for them, these companies are buy. So whether it could be eKYC, it could be PAN, it could be Aadhaar, or ONDC, enormous opportunities in front of these companies. I think some of these companies will prove to be great winners over the next 3 to 5 years. So I certainly would invest in them, but not for 1 year, but over 3 to 5 years. The other sector that surprised me myself, which I have bought, is the pharma space. And we're all familiar with the Dr. Reddy's and the DVs of the world, which are outstanding leading companies in this sector. But we've looked at the smaller mid-cap companies which are developing intellectual property from things like obesity vaccines, dengue vaccines, obesity pills, dengue vaccines, antibiotics, new range of antibiotics. I think there are a lot of rich pickings surprisingly in that sector because for the first time these Indian companies are doing genuine, serious intellectual property. I think the market will start recognizing and rewarding them over the next 3 months. So marginally, wherever I put the money for the things that I've sold, I put it in DPI and I put it into the pharma space. You've had a pretty dull quarter of results, so it has worried me. But my feeling is that is a more transitory effect. I think the government expenditure has come down, but it will start picking up again in the next quarter, and that will act as a stimulus for the economy. And as someone said, that basically if they change the GST rates downward in some critical issues, that will also act as a stimulus. So I'm hopeful that after 2 or 3 months of a very heady rise, the market will again recover maybe in the first quarter of next year.
If you look at last 3-year returns, Nifty is up less than 12% per annum. You can do it from today back 3 years, or maybe 12 point something. And the 500 is up 15 point something per annum for 3 years. In those 3 years, 4 years of 2004 to 7, the 500 index was up something like 40% per annum for 3-4 years. So this bull run is not like that. But the one thing that has spoiled it a little bit is that the results of this quarter are pretty mediocre. And therefore, I think, depends on what you call a bull run. We call a bull run as somewhere in the range of our history, which is mid-teen, more than debt, more than other things, but you're not going to make 20-25% with these kind of results.
If you look before the election results, the top was around 23,000, 23,200. Then we fell at 8-9%. So I feel that just that pre-election level will work out as a very big base. This is around 23,200, which is what, about 3 to 4% lower than here. So I feel that that's going to actually be a very big solid base. The market is giving you that kind of correction. There is no structural issue. Yes, things get mixed. There has to be a reality check. Excesses get done, and those are getting corrected. So I don't see any structural issue that is a problem with the market. Corrections, it's just par for the course. I still think that before next Diwali, well before next Diwali, we would hit a new high. We would push more towards the 29,000 to 30,000 level. Again, I'm not giving any targets, but what I'm trying to say is that we, as an investor, I do see the next 12 months to continue to be rewarding.
All right, that is some market opinion coming in. Talking about markets, steady so far on the Nifty. We still see a cut of almost around 426 points, but it has slightly recovered. It's stabilizing at that 23,876 mark. If we talk about the mid caps, the big cut continues, though it has come off, from the lows of the day at least, 816 points there. The advanced decline ratio is in favor of declines, comfortably there for around 379 stocks on the advancing side on the NSE. There are around 2,100 stocks which are declining currently, so big gap there. So we'll keep tracking all the market action for you, but for now we'll take your leave on this edition of Trading Hour. Stay tuned, halftime report is up next.